Hello everyone. In this video we are going to discuss some other types of custom duties. We have already discussed basic custom duty, social welfare surcharge, CVD under section 37, CVD under section 39. CVD under section 37 to counter IGST, CVD under section 39 compensation cess. Now, to protect the Indian manufacturers or the Indian industry, government can levy some more types of duties. Like government can levy anti-dumping duty, government can levy CVD on subsidized goods, and they can also levy safeguard duty. Now this is the power available with government. When we talk about these duties, they can also place some quantitative restrictions that only a particular person will be able to import that particular product. Only a particular person to this extent of quantity will be able to import that product. That is going by import licenses. That can also be done. So all these are measures so that the Indian industry can be protected. Now when you talk about anti-dumping duty, see, anti-dumping duty, when there is a case of high dumping of a particular product happening towards and affecting Indian manufacturers, in such cases anti-dumping duty is levied. How much of anti-dumping duty can be levied? Anti-dumping duty can be margin of dumping or injury margin, whichever is lower. Now what is margin of dumping? Margin of dumping, let's see it through an example. See it very carefully. Now, first we'll focus on anti-dumping duty. When we talk about anti-dumping duty, say suppose a product from US is being dumped into India because the product is no more allowed to be sold in US. So they are dumping it into India. The price at which it was being sold in US is 40,000 rupees, equivalent of INR. In India, the price of that product is 25,000. So no prudent person will sell that from US to India at 40,000. So what they do? They completely reduce the prices and start selling it here at 10,000 rupees. This becomes the export price. Now in such case, what happens is that the Indian industry gets affected. The Indian manufacturer has a selling price of 25,000, while in case of import, the cost will be only 10,000 plus basic custom duty, social welfare surcharge. Totally, the landed cost coming to 11,100. Now, in such cases, the Indian manufacturer is affected. What would government do? Government can come up with anti-dumping duty. And how much of anti-dumping duty can be levied? Margin of dumping or injury margin, whichever is lower. Both the terms have the meaning. Margin of dumping. When I say margin of dumping, normal value minus export price. See what's the normal value of this? 40,000. Export price 10,000. So margin of dumping is to the extent of 30,000. This compared with injury margin. Injury margin is the effect which is caused on the Indian manufacturer. कितना effect हो रहा है Indian manufacturer को? Fair selling price minus landed cost. What's the fair selling price? 25,000 minus 11,100, which is the landed cost to the importer. So fair selling price minus landed cost, which is injury margin. Now, what is anti-dumping duty? Margin of dumping or injury margin, whichever is lower. How much does that come to? It comes to 13,300 because 13,300 is lower than margin of dumping of 30,000. This is the power which is available to government. Now, when we talk about anti-dumping duty, can it be retrospective? The answer is yes. To the extent of 90 days from the date of notification, it can be retrospectively. Last 90 days, whoever has imported, now he will be liable to pay anti-dumping duty. Now, see all this data which is mentioned on the screen will require time. It's not that the government will get to know the normal value, export price, landed cost and fair selling price in just about 1 month's time. It all takes time. In such cases, for the period, government can levy provisional anti-dumping duty. Reason being, they are also not sure of the exact number. They'll go with a provisional anti-dumping duty. So obviously provisional anti-dumping duty is permitted. Now once a calculation of anti-dumping duty is made, it would be valid for 5 years plus government can again extend it to 5 years. So the total comes to 10 years. What happens after 10 years? Can government still levy anti-dumping duty? See, say suppose the dumping continues, they can again do a fresh analysis and levy a fresh anti-dumping duty. That's within their power. Clear with this? So this is to protect the Indian manufacturer. Now, there is one more type of duty which is CVD on subsidized goods. Say suppose some country is giving subsidy. It could be in the form of cashback for exports. It could be in the form of interest-free loan in case of export. If government is giving a subsidy so that the other country products come into India at cheaper rate. Say suppose Chinese government is giving a subsidy of 20 rupees and the Chinese person is exporting it to India at 30 rupees. The cost in India is 50. Now the question is, the Indian manufacturer is affected. Can government protect him? The answer is yes, by levying CVD on subsidized goods. And how much of CVD on subsidized goods can be levied? To the extent of subsidy. To the extent of subsidy being given, it can go up to that. Can it be retrospective? The answer is yes. Can it be on provisional basis? The answer is yes. It would be valid for 5 years and one more extension of 5 years would be allowed. Yes? Okay. Now, say suppose you are not finding any fault. Like, there is no case of dumping. There is no case of subsidy being given. In such cases, what can government do to protect the industry? This happened in steel industry where the product was being imported at 900 rupees while Indian manufacturers were selling at 1200 rupees. So obviously import was being preferred. In such cases, what would the Indian industry do? Because they are being affected just because of lesser technological upgrade and higher cost of input in India. In such cases, government can protect these manufacturers by levying something known as safeguard duty. Now, provisional basis allowed, but safeguard duty can never be retrospective. So, safeguard duty is to protect the Indian manufacturers when there is no proof of anti-dumping or there is no proof of subsidy. In such cases, government can still protect the Indian manufacturers by levying safeguard duty. Once safeguard duty is levied, it would be valid for 4 years and extendable up to 10 years. Now, let's try to understand some key points on all these. Anti-dumping duty and safeguard duty will not go together. Anti-dumping duty and CVD on subsidized goods will not go together. There will be one of these duties which will be levied, not both of them. So, even if there is a case of anti-dumping plus there is a subsidy which is being given, still both cannot be applied because the dumping duty which you are applying will cover whatever subsidy has been provided by the other government. So remember one thing, anti-dumping duty and CVD on subsidized goods cannot be clubbed together. Thereafter, can we file a case against any anti-dumping duty as an importer? Because effect कौन होता है? Importer effect होता है. Importer को ज़्यादा भरना पड़ेगा. Can importer go against these anti-dumping duty and CVD on subsidized goods? The answer is yes. He can file an appeal against these. Then, when we talk about any import from member countries of WTO, see, India is a member country of World Trade Organization and all these are stopping trade. Any anti-dumping duty levied will act as a trade barrier. In such cases, Indian government will have to prove that there is a actual effect which is happening on the Indian industry and that's why these were levied. Now, there is one very important exemption for safeguard duty. Say suppose safeguard duty, we talk about a SEZ or a EOU which is importing these goods on which safeguard duty is applicable and thereafter they are exporting. Should safeguard duty or these duties be levied? The answer is no. The answer is no. because let SEZ import it and let SEZ export it. But if the SEZ or EOU gets it into India, in such cases, these duties will be applicable. So this was one exemption which is common. Now there are two other exemptions which are available for safeguard duty. And what is it? For safeguard duty, say suppose the product is being imported from one developing country. If it is being imported from one developing country and the share of that is less than or equal to 3% of the total imports, in that case, safeguard duty will not be applicable. Sir, what if it is coming from more than one developing country? If it is coming from more than one developing country, then try to club all those countries whose share is less than 3% and the combination of all should not exceed 9%, then the exemption will be available. Listen to me very carefully. If it is being imported from more than one developing country, what will you check? First, take the combination of all those developing countries whose share individually is less than 3%. So say suppose two countries have less than 3%, 2.5, 2.5. Then club them and it should not exceed 9%. So 2.5, 2.5 obviously does not exceed 9%. Yes, the exemption would be available. Clear? So three exemptions. One is a common one, EOU, SEZ. Second, one developing country does not exceed 3% of the total imports. More than one developing countries, pick up those developing countries where the share is less than 3%. The total of that should not exceed 9% of the total imports of that particular product. Clear with this? Yes. Now, from where will you start these calculations? And whether CVD on under section 937 and 39 would be applicable in such cases? The answer is yes. You remember valuation in case of GST. Any tax other than GST will form part of value. Taking the same logic, say suppose safeguard duty is charged or anti-dumping duty is charged. In that case, will CVD under section 37 and 39 be applicable on such safeguard duty and anti-dumping duty? The answer is a obvious yes. Hey, clear with this? Yes. So CVD under section 37 and 39 can be applicable on anti-dumping duty, on safeguard duty or on CVD on subsidized goods. Now, anti-dumping duty, you will do the calculation and add it, correct? You will do this computation and add it as custom duty. Safeguard duty is applicable on assessable value. Say suppose assessable value is 10 lakh, then safeguard duty is applicable on that. But please, for God's sake, don't apply safeguard duty on basic custom duty and don't apply basic custom duty on safeguard duty. And forever, don't do social welfare surcharge on safeguard duty. Don't do that. Safeguard duty is applicable on the assessable value, but CVD under section 37 and 39, once you add everything, thereafter, you will apply CVD under section 37 and 39. Hey, clear with this? Yes. So while you are comparing, remember CVD under section 37 and 39 are applicable for all the taxes other than GST and compensation cess. Okay. Now, say suppose a set of articles are imported and for a single price. In that case, what rate of custom duty will you take? The law has clarified that if a set of articles are imported for a single price, then you will take the highest rate. Clear? Okay. Now, one very important discussion is with regard to accessories. What happens in case of accessories? Accessories will suffer the rate of custom duty of accessories or the machine or the main product. That's the question. So, accessory coming with the main product and there is no separate charge. Remember, it is coming with the main product and no separate charge. In that case, it will be liable to custom duty as on main product. Be very careful. Custom duty as on main product. This has one more conclusion. Say suppose there is a separate charge for the accessory. Even if it is coming together, if there is a separate charge for that particular accessory, then accessory will suffer the custom duty rate applicable on such accessory. That also means that accessory accessible value has to be computed separately और main product का accessible value अलग से compute करना पड़ेगा. Remember this, both will have to be computed separately in case there is a separate charge for accessory. Remember it, accessory plus main product being supplied with no separate charge. In such case, accessory will also suffer the rate of custom duty which is applicable on the main product. Clear with this? Yes, this screen will help you to understand these duties well. See you in the next video.